Hey guys, Mike here. So another jam-packed video for you, and it was definitely an interesting day in the market. What made it interesting is some of the stuff we talked about in yesterday's video and then Saturday's video. Thank you for those who actually watched. And, we discussed some stocks that probably are going to move, or even an index is going to move, right? And that's exactly what's happening. And so I'm going to go through that with you, and then the segment of stocks that are actually moving up, right? And, whether that's going to continue or not, that's what we're going to have to see. But it's kind of doing it in the face of all this other data that's coming out. And so, of course, the two camps are getting entrenched right now. One saying, no, we got to start having a sell-off, and one saying, no, we got to keep going up. It's the new bull market and all that stuff like that. And I mean, when you look at this stuff, and I'm going to take you through all this data real quick, and some stuff to watch out for sure, is, this is the leading economic index, right? And you see the gray parts, the recessions, but the number of consecutive months of the monthly LEI decline. You can see where we're at. The only other two times it's been higher was in the 70s and then in the great financial crisis of '08 in that crash. So you can see, obviously, people are like, wow, that's amazing. But still, the market is rallying, right? And people say we're in a new bull market. Well, then you got recession probability. It's at its highest that it's ever been. It's tied with, what, the 70s again and the 80s, it looks like, early 80s when it hit it twice. So you got that going on. People are like, okay, well, I guess so. Here we go. The other stuff, start watching. And for those who don't believe in, technical balance and stuff like that, let me just show you oil right here. Because U.S. oil, this trend line goes all the way back to 1998, right? Bounced off of many times, as you can see. And what happened a few weeks ago? Bam, bounced there. What happened in March? Bounced there. So every time people think, oil is going to crash, this is where the algos come in, right? This is why markets are changed forever now, right? And so it keeps bouncing and it won't drop. But people look at this stuff to see if we're going to be slowing down the economy. Then you got Dr. Copper. Same thing. You get in that zone right there. Plenty of support resistance in the past. And right now, it's just literally just consolidating there. And so people are looking for a break, right? Because when it breaks, usually down through there, or it gets rejected as it's coming up, you get a nice drop. And if there's a slowdown in the economy, not just here, I mean all over, like especially China, right? China uses a lot of copper, but their real estate industry has been lagging. So I don't think people realize how much we use copper and everything. But they call it Dr. Copper for a reason. Not always 100%, but pretty dang close, right? So people are really watching oil and copper because that's going to show if demand is waning, right? And so it's just something people look at for. But the real problem, I think, is when you look at it, you just keep having these algos kick in at these levels and just holding it up, right? Propping them up or bouncing up and starting getting another push back up. So you can kind of see that that's actually what's happening. And, the other thing you see changing almost on a daily basis now is what's going on with these rate cuts, right? Because the whole premise of moving up was, we're going to start cutting rates and all this other stuff. And as you can see, the line from May 5th, obviously, oh yeah, we're cutting, baby. Starting in July, moving on down to lower rates by year end. We're going to be down to like 4.4%. And then all of a sudden, wait a minute, I think they're going to hold us up here. And so all of a sudden, you don't see it start moving down until September and setting around was like 4.8-ish, somewhere in that range of December. But they still are pricing in 3 cuts, right? That's still what's going on. And so, again, I don't see that happening unless obviously something terrible happens. But, all of this is happening at the same time. Here you got tech. Compare the NASDAQ 100 to the S&P 500. And here it is, that's the dot-com bubble right there. We're approaching that level right here. The only time we've been higher is in 2020 when we went through a huge bubble, obviously, with all the free money that went out and everybody and their mother got in the stock market, right? And so that's what's happening. It's amazing to see that, especially when you're listening to these earnings calls. And yeah, they're cutting calls, but as far as like the revenue growth, stuff like that, I mean, not really, especially, when you look back, I mean, it reminds you of the dot-com or 2020, right? When you kept trying to figure out how these valuations were going up and how these stocks kept mooning and stuff. And then what else is happening? People are shorting the market, right? And this is what can keep calling these melt-ups. Look at Upstart stock today, up 26%. It keeps going up double digits because that was a highly shorted stock with a very small market cap, right? And what else do you see happening? I told you the S&P 500 futures were shorted to the level of 2011. Well, they've increased it even more. Now we got to go back to 07 to see when it's actually been this shorted before. And it's not just in the S&P 500 E-mini futures. It's all over the place because of the levels we're getting right now, right? And so as that happens, as the market keeps melting up, and keeps moving up, especially if you have these big moves up, then of course what's going to happen? You're going to have people start having to short cover, and that's going to drive the stock up even more. And before we continue, guys, if you get anything out of this, please hit that like, subscribe button. I really appreciate it. And think about sharing the video. And if you like the content, think about subscribing. And just one final reminder, this deal from Seeking Alpha will end today at midnight. You get $99 for a 1-year subscription, normally $239. Obviously, as I've said before, anything you want's there. You track the top stocks, top ETFs, stock screeners, ETF screeners, comparisons, news, you name it. It's all there for you. So if you're interested in it, again, you can cancel in 7 days if you don't like it, but just save up to 59% for the year. You can click on the link down in the description below, guys. Thanks. And so that leads us into the charts. And I'll show you 3 areas, especially like types of stocks that we're moving today, right? And some of these, again, we had talked about yesterday and in Saturday's video and stuff. And you can see one, obviously the Russell Index. You know, I told you guys last week, I said this can move up really fast. I'm going to show you why, and that's exactly what's happening. But you can see right here when it moved up, it gapped up this morning because the SPY and the QQQ didn't do a whole lot. But DEM, that line right there stands for daily expected move. It's something I give to the members every day. It's what the option market is expecting. Sometimes it acts as glue, and you can see up there once it hit it, it consolidated for quite a while sideways, popped back up, and then came right back down to it. But again, we're up there in that huge supply zone right here, right? And we've been here before multiple times, and then we'll go out to the hourly, so you can see, and then we'll hit the daily in a minute. But you can see I told you guys that once the RSI goes over 50, MACD is a bullish cross, especially once it crosses the 0 line and stuff. You know, we end up getting a nice move up, plus you had a big volume gap there for it to move through. And the reason why this can continue is because you got a volume gap on the daily right there, you can see, because we've seen this movie before, right? You got the RSI on the daily crossing over the 50. The MACD is about to cross over that 0 line. And when that happens, the last thing is 4 times, we still continue the move higher, right? Now, again, we're in a supply zone, probably going to get a pullback. It was a big move today, almost like 1.5%, I think, at some point in time. What has to happen, though, to continue this for the rest of the year, not just like for a week, is you have to start having other people participate, right? You have to have the Russell 2000 stocks. You have to have more of the Russell 2000 stocks start to set like new 24-week highs. And you can see right here, when you look at this right here, obviously hadn't done a lot of nothing. It's been trying to move up, but compared to times in the past over the last 4 or 5 years, you know, you can see big spikes here. You're not seeing that right now. That doesn't mean it isn't going to change. Now, what else is happening? Still got the regional banks trading like penny stocks, up 20% one day, down 10% the other. And so, you know, you can just see, are they coming back? Yeah, or are they just being traded? That's really the key. And for what I read was some big whales are loading up on these regional banks. And so that could be what's pushing these up, and maybe they finally found a bottom and moved up. And then, of course, the other group of stocks that was moving up today, I call the ARK stocks, right? MP, DraftKings, Teladoc, Roku, Twilio right there. You can see all of them in the green, Upworks, those kind of stocks moving up. And I think even Zoom reported earnings is up 6% after hours. And so these are the type of stocks that were moving today and helping you know, the index at least somewhat stay in the green or whatever. But the other one was, I talked about yesterday, Tesla, right? And what did it do today? Broke above this trend line, which goes all the way back over a year now. And we broke above it before for a short time. I want to see if the candle actually, we close above it tomorrow. We'll see if we get maybe a slight pullback or something. But again, it moved through that volume gap, filled that gap completely. Now it's breaking this trend line, and you can see it right there. So it'll be nice to see a healthy retest of that trend line, see if we can turn and obviously do a support resistance flip right there, since it has been brutal. Because you can see right there on the hourly, it might be a little bit overbought, just saying. You know, MACD's getting a little stretched there, so healthy pullback would be good. But I told you, there are people out there that got like $220, $240 price targets going on this thing for the rest of the year. And of course, with Tesla, who knows it will take that long. But again, the gap right above it, you can see that's actually, I believe it's the 200 range right there. So that would be the next target if we can keep going. On the daily, you can see the MACD is about to cross that 0 line. It is not overbought on the daily. So keep that in mind. Meta, what did Meta do today? It finally started to breach into the 17% gap we've been waiting for forever and a day, right? Still got a gap down there below. I just took that one out. There's another gap way down there. But here's this gap. So put in the comments, 1, where do you think Tesla's going? 2, do you think it's finally going to fill this 17% gap? That's going to be the big question, right? And so you can see the RSI down there. It's like, maybe trying to tell us something, maybe not. But again, usually gaps just don't feel like that. We'll have to wait and see what it's going to do. But the day was a little fishy in a way, just because like at one point in time, like everything was green, right? All the indexes were green, the VIX was green, the dollar was green, the treasuries were green. It was just one of those weird days and stuff. And so a lot of people get very suspect about that, especially when I start seeing short squeezes. But again, this is what we talked about. What does big money like to do? Like to drive certain sectors up, stocks up, and then they like to start rotating out of those, taking profits. And when they take profit, it doesn't mean they're leaving those positions. They're just taking some off the table, and they got to put that money somewhere. They'll put it in the most beaten down areas. What's most beaten down? What we talked about? Regional banks, right? A PayPal type stock, which I kept showing you, which had a good day today. A DraftKings, which I keep telling the members about, and that's moving up, right? Big day today. The ARK stocks, ARK itself, I mean, ARK F, ARK K, you name it. You know, you look at those things, they're beat down. And like, you know, I read some today, I said, look, forget who owns them. It's just what they do. They're going strictly off charts. And I told you, what's happening now? You got this rounding bottom on all these stocks that have been hammered down to the boneyard there. You got a trend line coming across where it's been rejected multiple times. It breaks through. Then there's a resistance right there. And once it breaks that, they start to take off, right? Because big money started to push into them. It ain't us trying to push all these stocks up. And so, but that's what you're seeing happen right now. It's what I see happening, at least. Let me know what you see. But, you know, take advantage of it while you can. Now, that gets us into earnings. Speaking of some of these stocks, in a way. Obviously, I talked about Zoom, just reported up 6% after hours last time I looked. But tomorrow is really about retail, right? So you have Lowe's, Dick's Sporting Goods, BJ's, AutoZone. AutoZone, I think, normally does pretty dang good. Palo Alto, Intuit, and then Toll Brothers. Again, these builders defy logic, and so most of the real estate stocks have actually been doing really well. So, and then Urban Outfitters, pay attention to them as well. And then looking at economic data, I don't think there's anything that would actually move markets in a negative way, but you will have the S&P Global Composite PMI Flash, manufacturing and services, and then you'll have the Richmond Fed manufacturing data coming out as well. But the key is pay close attention to the small caps, even the micro caps as well. Pay attention to whether you want to call them garbage stocks, beaten down stocks, ARK stocks, whatever you want to call them. Pay attention to see if they continue to run, right? And because I'm telling you what you're seeing is the shorts are going to start getting squeezed out of those positions if that continues to happen, which means they're going to go up even more. A lot of them have small market caps compared to obviously an Apple or Tesla or any of the rest of them. So it don't take a whole lot to push them up, right? Because what happens, people start seeing price change and run up, and then all of a sudden they start flocking to it, right? That's what happens. Start flocking to it and pushing, buying calls, which means the market makers have to come in, right? And then they're the ones selling the calls, and they got to buy the stock. And so, you know, it's going to be interesting to see, you know, how that goes when on top of all of this, what do you got going on? The debt ceiling negotiating keep breaking down. Who knows what's going to happen there? I mean, it's just a soap opera, for God's sake, to say the least. But let me know what you think about that in the comments. I mean, everybody's expecting the deal to get worked out, but again, it's just a political thing at this point in time. So, you know, we'll see, because supposedly, like, all the Democrats aren't happy that Biden's actually even negotiating, because he said he wasn't going to negotiate. But then McCarthy's coming out saying, yeah, we're just not even close right now. And understand that to get a bill passed, you can't just like say on a Friday we're going to pass a bill and run over there and vote and pass the bill. It's not the way it works. And so, and when we happened in 2011, when we actually fell in the market, I showed you the timeline. There was no default or anything. The market fell before they even actually had the bill, right? Even when they knew they were going to have a bill, and it was like, didn't matter. Even if they passed the bill, the market still fell, right? And so, you know, keep that in mind, because the one thing you want to avoid, and that's what I think people keep trying to say, you want to avoid a downgrade of our credit rating again. That's what they really avoid, and they keep bringing it up to the brink. You know, I showed you the other day when I was talking about the credit default swaps, right? And how you got companies like countries like Greece and Bulgaria or countries like that are, you know, they're considered risk or less risky, excuse me, than us. And it's like, really? But I mean, that's the fate that people have in our politicians now, right? In our government, because they keep wanting to play these games. But anyway, hopefully they'll get something worked out. We'll see what happens. Let me know what you think in the comments, guys. And if you got anything out of it, please hit the like and subscribe button. I really appreciate it. And I'll see you tomorrow.